Hey traders and investors, it's Serge Berger here. Today we have to look at the S&P 500, give you guys a little bit of an update of what is taking place here because the S&P continues to be at quite a precarious spot. So first of all, let's look at the S&P 500 here through a multi-year lens. And what you can see is just a couple weeks ago, the 50-week moving average, that's this yellow line, started crossing below that blue line, which is the 100-week moving average. And while I am not a big fan of sort of believing too much in these kind of simple moving average crossovers, the reality is that the last two times this happened, i.e. in 2001 and then again in 2008, it didn't exactly spell a lot of positivity for the markets, and you can see how they sold off at those times. So that's the real picture, the big picture point here. And again, also what I would point to here is that these crossovers took place after an extensive topping period, right? Which we more or less have once again here on the chart right now. The other thing then, if we want to look at this a little bit more closer up, you'll see that the S&P 500 here also continues to trade below this yellow line, which is a 21-day moving average, right? So we have a real well-defined line of support around 2040 or so, which was last week's lows and the low before that. And we are now starting to see even the near-term moving average here start to roll over, or in the case of the 8-day one, has already rolled over. Another thing to point out too, and this is quite important, is the transportation stocks. While they are bouncing here today as I'm recording this, they continue to be very much, making a series of lower highs here. And until that changes, in other words, until we still break out to a higher high, at least above those April highs, it's going to be very unlikely for this broader cyclical bear market that we have in stocks right now, believe it or not, to be over. So that's a real important point here. Again, on the S&P 500, first area of support here is about 2040 or so. If that breaks, we should probably get to the 2000 area fairly quickly. And again, if we go below there, then you have seen that bigger picture chart I showed you before of those weekly moving average starting to cross each other, and that would be quite bearish for the S&P, for at the very least a retest of those February lows and possibly well lower finally. One more thing I want to go through today, guys. I am holding a special webinar this Wednesday on options income. It's my strategy for monthly income using options. The sign up link for the webinar is down below in the comment box. Please also don't forget to like my video, subscribe to the channel, and as always, guys, I will see you in the next video.